Well, it looks like some of us got exactly what we were asking for in NIO stock. And in case you guys haven't seen my previous videos, especially the most recent one, I talked about the fact that I have a speculative position in NIO. My average cost basis is in the $6 range. And because my position climbed by like over 55% in a very short amount of time, I decided to cash in about 5% of my position at around $10.40. And here's a screenshot. This is exactly what I showed in that last video, and I made it very clear that I was not buying any more stock, and I was actually cashing in some profits and just kind of trimming my position a little bit in hopes that the stock would pull back on weak earnings and give me a better buying opportunity. And a lot of you said basically the same thing, that you felt the stock had basically gotten away from you because it was trading at such a high price that you were hoping that earnings would be weak and you would get a better buying opportunity. Well, we got that and more. Earnings were pretty bad and the stock tanked. I mean, it crashed by like 20 to 25%. It was a very nasty drop. I do just want to make one thing clear though. I never tell you guys to buy or sell anything. I'm just sharing my opinion on stocks. And I also made it very clear in that previous video that not only was I not buying any more shares of NIO at that high price, but I was actually cashing in some profits. But even though I said that, I still received some pretty dumb comments from people that just have no idea what they're talking about, but they left these comments basically after the stock tanked. But that's just YouTube, there's no filter on the internet. Some people are just really angry and they want to blame other people for the mistakes that they make. So I've learned to just ignore it. And like 90 to 95% of you know that you should always do your own research and make your own decisions, and you're always very knowledgeable and very nice and everything. So I'm not really worried about it. But anyway, I just wanted to quickly kind of throw that out there, that you should always be making your own decisions, and I'm never telling you what to buy or what to sell or anything like that. Okay, so I promised you guys that I would do a review of their earnings, and I've noticed that some earnings reviews out there have just kind of glossed over some of the numbers, but they haven't really gone into any details. And I actually listened to their entire earnings call, and there was actually a lot of information there that I found very interesting. So today we're going to talk about all the concerns and all the negatives that came out of the earnings report, which obviously there was a lot. It made the stock drop by like 25%. But I'm also going to talk about some of the pros and some of the things that I don't necessarily see as much of a negative as some other people see. So we're going to talk about all of that and more in today's video. Hit the like button if you enjoy this, and let's get started. What's up, everybody? My name is Ala, and welcome to my world of stocks. All right, let's not waste any time. Let's jump right into their earnings. Okay, starting with the raw numbers, let's look at vehicle production and deliveries, which we already knew coming into this earnings, but we'll just do a quick recap. Now, they produced over 8,000 ES8s in the fourth quarter for an increase of over 91% quarter over quarter, and they delivered almost 8,000 for an increase of over 144% quarter over quarter, and full year results had over 12,000 produced and over 11,000 delivered, which, by the way, I believe guidance was for just 10,000, so they easily beat expectations by more than 1,000 delivered. Moving on to their financials, we can see that total revenue for the quarter was up over 133% quarter over quarter to 3.4 billion yuan, or about 500 million US dollars, which did beat estimates of around $493 million. Gross margin increased from negative 7.9% in the previous quarter to positive 0.4% in this quarter, the fourth quarter, and vehicle sales were up 137%, and vehicle margin improved from negative 4.3% to positive 3.7%. However, the losses continued to pile on in this quarter, as GAAP net loss was even higher than their revenue, although the difference was much worse in the previous quarter, but the raw amount increased by much more, by almost 25%, and non-GAAP net loss increased by 41%. And despite their EPS and adjusted EPS both improving by 92 and 69% respectively, it still failed to meet estimates calling for 32 cents in US dollars versus what they reported of about 49 cents per share. Still, they were absolutely negative, so the cash burn is by all accounts continuing and remains at high levels, with net loss for the year being around $1.4 billion. Keep in mind that they only did around $720 million in revenue, but still commanded a market cap of over $10 billion when the markets closed before the earnings were released. although that's obviously dropped significantly now to somewhere around 8.2 billion for the market cap, but that's still very high at around 11 times revenue, although they've only been selling the ES8 for half the year, with the only significant numbers being in the last few months. So, you'd have to definitely do some math and make some adjustments there if you really want a more accurate portrayal of like market cap to revenue. But in any case, their balance sheet holds close to $500 million in cash, around 1.8 billion in current assets, and around 2.7 billion in total assets, while liabilities sit pretty high at this point with around 1.2 billion in current liabilities and 1.5 billion in total liabilities. But overall, I'd say that their valuation is really high at this point given the small amount of revenue being generated and the wide losses. But that would also be ignoring the fact that China is the biggest EV market in the world, and there is no doubt that there is enormous room for growth in the future. It's just a question of whether or not NIO can capitalize on that. Either way, earnings were weak, but not exactly a huge surprise. So why did the stock tank by so much? Well, that brings us to their more recent delivery numbers and their very negative outlook. In fact, deliveries for January were just 1,805, which is an enormous decrease of around 45% from December, and deliveries for February were even worse, coming in at just 811, which is a decrease of around 55% from January and 75% from December. So why the enormous drops in deliveries? Well, they pointed to a few different reasons. One is that they ramped up productions to meet high demand at the end of the year because everyone was fearing the Chinese subsidies for EVs will dramatically be lower this year. And because those subsidies generally get announced in January, it's understandable that EV sales would be high in the months leading to that. However, we're now already in March and those plans have still not been released, but NIO said that they do expect them to be significantly lower, which is a bit of a negative. On the bright side, they also mentioned that because they're more of a luxury EV maker, they're impacted more by taxes, and they believe that the recent tax cuts announced by the government will help them more than the subsidies could, but we'll talk more about that in just a second. I also want to quickly point out something that nobody seems to be bringing up, and that's that NIO has thousands of pre-orders for 2 different versions of vehicles that haven't even been released yet, and that has to undoubtedly be affecting their delivery numbers in the short term. In fact, they have over 7,300 pre-orders for the ES6, and that's not being delivered until June. Not to mention that the ES8 is already the best-selling premium 7-seater EV in the market, which they claimed in their earnings call that it's outselling Tesla's Model X by a quote wide margin. And they already have another 4,200 orders for the ES8, and 1,300 of those are for a new 6-seater version that isn't launching until the second quarter, so that also has to be taken a toll. But moving on to reason number 2, they feel that this time of year typically sees a seasonal slowdown, but unfortunately they didn't give any specifics on that other than mentioning that the New Year's holiday affected about half of their month in February because of offices being shut down, and that has also led to further delays with licensing and registrations. However, they also mentioned that they still think vehicle deliveries could be as high as 45,000 for the year, so my guess is that they're expecting some pretty big numbers at the second half of the year. Keep in mind that January only did, over 1,000, February was less than 1,000, so if you take even the bottom range of that, the range was like 40 to 45,000 for the year. You take the bottom range of that, that's around 3,000, more than 3,000 per month, and you basically, take out January and February, those are very weak months. You take a few other weak months in the first half of the year, you could potentially end up with the second half of the year being like 4,000 or 5,000 deliveries, maybe even more, depending on the situations. But this could potentially mean some strong third and fourth quarters for them, especially when compared to the prior year. It's obvious that Q1 and Q2 will be really ugly, but Q3 and Q4 do have some potential. And, I just don't really see anybody talking about that, which I find kind of fascinating. But either way, I did some further research on their seasonality claims, and I found this chart of auto sales in China from 2016 to 2019, and I drew some arrows to show you guys that there are in fact some really sharp declines at the start of the year in all 3 years. And it's hard to see 2019 on this chart, so I zoomed in a little bit to the last few months, and you can clearly see a sharp incline at the end of 2018, but then a very sharp decline at the start of 2019, but the data only goes to January, so it might even be lower than that. So maybe all the blame that is being tossed on NIO isn't exactly warranted. Anyway, moving on to reason number 3, they pointed to the macroeconomic conditions of the country, including the auto industry. Well, I already showed you guys the auto industry on that chart, so let's now take a look at China's GDP numbers. Well, you can see on this chart here that they're clearly seeing a dramatic decline in their annual growth rates for almost the past decade, and zooming in on the past couple years, they've also been dropping pretty dramatically from around 6.8% to around 6.4%, and we know that China is targeting 2019 to be even worse as they project GDP to grow at around 6 to 6.5%. And while that is still high growth compared to the rest of the world, many analysts feel that China's numbers are always a bit exaggerated, so couple that with the ongoing trade fight with the US, and you definitely have some macroeconomic issues that could be affecting this company. That is a very reasonable argument. But on the bright side, it looks like we are making significant progress in our trade talks with China, and we also know that China is implementing some very large tax cuts worth around 2 trillion yuan and other economic stimulus to crank up the economy. And I'll share my thoughts on that a little later in the conclusion, but moving on to reason number 4 on why I think the stock is getting hammered. Part of it is because they canceled their plans of building their own manufacturing plant in Shanghai. Instead, they want to focus on their partnership with Jack Motors for at least the next 2 to 3 years to help them with growth, and then expand on that even further with even more partnerships if necessary. Now, they didn't give a lot of details as to why they're doing this, but it seems like the Chinese government is supporting partnerships between I don't really know what to call it, maybe like automobile developers and manufacturers, and you guys can correct me if I'm wrong, but I believe that Jack Motors is state-owned by China, so this may give them a closer relationship with the government. As they mentioned, one of the benefits is being able to apply for subsidies directly from the government and other benefits like that. So personally, I don't really have a problem with this. You have to keep in mind that this is a brand new company with huge ambitions, so if they want to pass along all the manufacturing headaches and issues to an already well-established and reputable manufacturer like Jack Motors, who, by the way, will be able to pump out over 150,000 cars a year, I say go for it. Tesla went through huge issues building their own cars, so if NIO can get help from a state-owned manufacturer in China, who is one of the best at manufacturing things, at least manufacturing them quickly, then I think there's some potential upside to that. NIO can just focus on developing great cars, and if they ever become huge and expand in the future, then I think they can look into building their own plants at that time. By the way, in this screenshot, you can see that they referenced 3 different models, even though there's only 2 currently out right now. I know that they're much more focused on SUVs because they believe that the Chinese population prefers SUVs over sedans, which they did mention in their earnings call, but it would be really cool if they do announce a new sedan, maybe at their next NIO Day in December. But moving on, I think concern number 5 is that NIO has their IPO lockup period expiring in a few days, so initial investors will now be able to sell the stock. So if we see a significant selling from institutional investors, that could definitely hurt the stock, at least in the short term. But I'm thinking long term anyway, so I'm not really too worried about that. It might just give me a better buying opportunity. And finally, I just want to touch on the concerns of having to compete with Tesla, because it's what everyone always wants to talk about now, since Tesla is opening a new gigafactory out in Shanghai, and of course NIO canceled their plans for a new factory. But during the conference call, JP Morgan asked NIO about their concerns of Tesla's lower prices and their soon-to-be localized Model 3, and in my opinion, I thought NIO's CFO responded very well, and here's what he had to say. And keep in mind that there's a little bit of a language barrier here, so forgive me if I just kind of mess up when I'm reading this, but basically says, quote, "The Tesla price reductions, it's my opinion, I think is in part directly because NIO is already, our ES8 is outselling Tesla's top brands, the S and the X, which is why the price reduction was so significant. 15 to 20% is huge. And on Model 3, I think Model 3, the base version, which doesn't even compare close to our ES6 in performance or range, is over RMB 400,000. As William just said, ours is RMB 258,000 if you take the battery lease option to start with, which, by the way, this isn't me quoting them, but by the way, I think that they mentioned that around 70% of NIO customers take that option. So it's basically a much cheaper ES6. And I don't remember if I mentioned this before, but the ES6 is the smaller SUV. It's the 5-seater SUV. But anyway, he went on to say, so I don't think it solves the competitive problems for Tesla in China. Ours is RMB 258,000. Theirs is about RMB 410,000, the cheapest version. But the Model 3 is a small car. It's not even in the same class, right? It's a small sedan. It's like comparing the 318i BMW. It's basically BMW 3 Series. I think that's like the base model. And then he says ours is more like an X5. I think that's like a BMW SUV, I believe. But then he says the ES6. Our range is 510. Their range is about 300 kilometers. Our acceleration is a second faster than theirs. 0 to 60 in 4.7 seconds. Theirs is like 5.7 or 5.8. Theirs has a single motor, ours is dual motor, so it's not comparable. So I think that was a pretty cool response, and it's not even mentioning the fact that NIO still hasn't announced a small sedan to compete with something like the Model 3, at least not yet. But anyway, if you guys ask me what I'm doing with my position right now, I think at these levels I'm probably picking up more shares, especially in the $7 range, and if it were to drop to the $6 range, I mean that'd be even better because that's where I have my average cost basis. So I'd love to pick up more shares in the $6 range. And I think it could actually get down there because I think the first half of 2019 is probably going to be a very rough start to the year. They already mentioned that Q1 and Q2 will be very slow. It's going to be a little bit of a struggle for them. So I think that they could start off slow, but then there are some catalysts to be more optimistic about, I think, going into the second half of the year, because you have the ES6 launching in like June, which is a smaller SUV. We already have a bunch of pre-orders for that. And then you could potentially get a deal being done between the US and China. And then you also have the tax cuts from China also stimulating the economy and maybe driving up consumer confidence as well. So I do think that the second half will be strong for NIO, but I think the first half will be pretty weak. So this is still by all accounts a very high risk speculative stock, I think, for the long term. So you have to know the risks that you're getting into. I get so many, you guys wouldn't believe the comments I get, but I get comments from people that just literally think that stocks just go up and up and up every single day and they can never crash or they can never go through a correction or a pullback. This is just part of the market. If you can't take those risks, you should think about not investing in stocks. But NIO especially, I mean, NIO is just a very volatile stock because, it's trading at a very high valuation and it loses a lot of money. So it's obviously going to be very volatile, but it's also in a market, a very high growth market that is, going to be huge in the future. And China is especially going to be dominating. They're going to be bigger than like all of Europe combined in the EV market. So obviously this stock is going to be very, very up and down and very volatile. So I'm just trying to keep my head cool. I'm trying to think long term and adding to my position when I see lower prices, but still a speculative stock. And if I were to lose my money in it, I know the risk that I took. So anyway, let me know how you guys feel about NIO and let me know how you feel about these earnings. I'd love to hear your thoughts on everything. And I guess that just about does it. Make sure you hit the like button. For some reason, I've been getting a lot of dislikes on my videos. I think a lot of people, I don't know if maybe they're just not, they just don't want to hear opinions on stocks, I guess. I don't really know what the issue is. But if you don't mind hitting the like button, it really helps the channel survive and grow, and I really appreciate it. So thank you for watching, and I'll catch you guys in the next video. Take care. Bye-bye.